just unmuted you. Welcome back to F.A.C.E, Rohit. How are you, buddy?
I'm great. Thank you for having me again.
I look forward to seeing your screen and your work. You have a lot of you have a nice following. People are hanging around to do this. Before we get started on your technical work, I just want to ask you: you trade from India, right?
That's correct.
All right. So, what is the media talking about in regards to this minor clash between India and China in the Himalayas? Are they even talking about it in the Indian media? And what's the talk on the ground there? That this is just something that happens all the time. It's not unusual, and kind of like what happens between India and Pakistan and Kashmir.
So that's how I would like to look at it. But of course, every time there is a clash, it creates a lot of sentimental noise all over social media and in the uh, front media itself. So people start worrying about, whether this is something bigger. Is it, whether can it really lead to a bigger clash? But we've seen many of these small ones over time. They come and go. There are some small issues that have to be resolved. I think most of the communication I've heard from yesterday simply says that they don't want this to, get any bigger. So I
Escalate.
don't think it will escalate,
Okay.
and it should just, get
Well,
taken care
well,
of.
I know you talk about the seasons of an economy of the world and winter, and many other people who talk about this, Kondratyov or other cycles that point towards us being in the winter season. War is part of that cycle. Even guys like Martin Armstrong and people that do that, and I just thought it was, kind of put it together that during the beginning of the pandemic, President Trump was visiting with your Prime Minister Modi and wondering if they came up with some kind of deal, and India's going to be a proxy for us because the U.S. is already in a Cold War with China.
So it is, what you're saying is right. And from an Elliott wave perspective, and I think Robert Prechter's studies shown that a lot of these events, whether it's pandemics or whether it's in the form of war, all occur in wave C of a bear market, or either at the early stages or late stages of wave C. So sometimes the event itself occurs, if it occurs in late stages, the markets in themselves may bottom out and then start recovering from there, which is why they actually provide us an opportunity, because if the news was not so bad, prices would not be down and you wouldn't have the opportunity to buy low. And I think that's part of where the narrative is. I think right now in my mind, most people are caught up still in thinking about whether the pandemic would spread into a second wave and there'll be future effects and so on, and they're not thinking 1 year down the line. So most of the thinking is probably 3 month and 6 month. But we've seen, I mean, at least in the Indian market, a 40% cut in the main index, but
Yep.
it's been a much deeper cut in the mid cap and small cap stocks, or what I should say is the broad market, because while the main indices didn't reflect this, the Indian market actually peaked in 2018 with a lot of Asia. I think most of Asia did not stop making new highs from 2018 onwards, even though India did in terms of its main index. But the underlying indices were not making higher highs, and so they kept on declining and fell much more than 50%. So there are stocks that are down 80%, 90% as well. So we've actually been through a pretty severe bear market with the COVID situation, probably aiding the last phase of that. And so I think what we were probably thinking about in April, that there could be one more wave down. I think that's where I left my last discussion with you. That
Okay.
one more wave down would be on the back of a last deflationary shock, which could come if the dollar spiked higher, and which is why I have the dollar chart on my screen, which I also shared last time.
Right.
And
So, yeah, what you were talking about, the same thing has happened in the U.S. market, even though a lot of especially with the mega cap stocks that are carrying NASDAQ to new highs, that, you could look at the Russell, you could look at the transports, you could look at a lot of things that are not making new highs or close to new highs. So Why don't we start with this chart that you have up here right now with different animals being representative of the cycles, and it looks like we're halfway through this, or maybe, yeah, halfway through this last cycle that you have up there. What is that an elephant up there? I'm not sure.
No, no, these are bulls and bears.
It's a bear? Okay. Elephants never forget. All right, so tell us what this means to you and what we should be thinking to, not only look at opportunistic things, but how we go about capital preservation techniques in here.
So what I tried to put out is cycles that were repeating in the dollar index. So this is of course the dollar index from 1967-68.
Yeah,
And what we've seen is repeated bull and bear cycles lasting between 7 and 9 years. So we had a 7 year bull, then a 7 year bear, then nine
I
years,
see.
again 7 years, and again 9 years. And so in 2017, when we hit 104 on the dollar index, I also, of course, Elliott wave wise, I thought we were done with maybe an ABC. And maybe we could start another 7 year bear market in the dollar index. What I probably didn't anticipate is what has happened post 2018 is we've actually retraced almost 90% of that loss. And I was watching it very closely because throughout this COVID situation, the dollar index did spike, and there was the potential for that one last spike. Maybe you'd go past 104 and make a higher high. But of course, the Fed stepped in, and we've not seen the dollar index really go past the 100, mark. Now, in doing so, what you end up with in the spot dollar is a near double top, or I would say a lower top. So this entire fall, I did think that it is a 5 wave decline, whether I mark it as one or I mark it as A. And we've had this prolonged second wave or B wave. And what I've been waiting to confirm is that we have started wave C down, or a third wave in the dollar index, which would, and of course, 7 years from 2017 means by 2024, we could be looking at much lower levels, or maybe a new low in the dollar index below the 70 mark that we made in 2008. So that's the broad thesis. And once we get that confirmation that the dollar index is rolling over, so far it's showing so in maybe the daily, weekly, or monthly momentum indicators. But of course, you wanted to break these multiple swing lows and supports near 95, 94 that it has made for more certainty. And once we get that, then what we are looking at really is a reflation trade. And that's what I started to write about from this month on, is that we may have shifted our regime from deflation to inflation. And the last time around, when I was thinking maybe this is a bounce and markets would fall once more, it was to expect that, okay, if there's one final spike in the dollar, you'll get that sell off in oil and commodities. And out of all the commodities, probably oil was the only one that fell off for maybe completely different reasons. Rest of commodities did not confirm that new low that oil saw all the way down to $6 at least on the official price, not looking at the futures negative spike. So once you've done that, I think it met all the long-term projections for oil, and you also ended up with something which I will call an intermarket divergence, which means that you ended up with a new low in oil without a new low in base metal prices, also without a new high in the dollar index itself. So this to me, you ended up with multiple long-term intermarket divergences between the currencies and commodities, and within the commodities themselves. All of them indicating that probably this was the change point where we are now shifting our regime from deflation to inflation and need to position ourselves very, very differently according to that.
Okay, so this last flush with COVID and crude going negative was the last hurrah for deflation, and the dollar index needs to close back under 94 to kick off a C wave to the downside to confirm it.
Exactly, that's right.
Okay, all right, interesting. All right, so this is a different tune since you and I were on together. So tell us what you're doing to start to position yourself. Obviously, you're looking for dollar shorts. Do you have a relative strength leader? What's your favorite fiats for taking advantage of a big dollar decline should it manifest?
I would think probably the Australian dollar, because that took the lead. It was the first one to start dropping. It's
Yeah.
also a major commodity producer. So, in effect, I think any currency pair which comes from a commodity producing country is seeing more strength than the others initially, purely
Okay.
on that basis. So that
Okay.
was the simple analogy. I would have
Okay.
expected probably the USD INR, which is our own Indian currency, to strengthen much more, but it actually has not. So USD INR has still not strengthened as much as rest of the emerging market currency pack. And yes, so
What do you say to the people that are, still looking for a blow off in the dollar based upon, their views that there's a dollar shortage because all the debt that's denominated, emerging market debt denominated in US dollars, that a revaluing up in the dollar could be used as a geopolitical weapon with China by making it more difficult for them uh, having to defend the yuan. What do you say to the guys that are talking 110, which I believe you were at one time talking about higher
yes,
levels in the dollar? Weren't you talking 110, 115? I mean, some pretty high
yes,
targets.
I was open to those numbers, and after that 2017 change, I for a long time thought the dollar bear market had started, but I did again flip and consider the possibility of going to 110 and 120 early part of this year. But
Okay.
I think the whole failure of that dollar run to continue, which may have been purely because of the Fed stepping in, uh, has sort of resolved that to some extent.
Okay.
And I think we have to pay attention to what central banks are doing, because I think the one of the biggest changes where we make a fundamental argument on currencies, and what I think we sometimes forget, is that we are no more on fixed exchange currencies where the weakness of a currency is reflected simply in its money printing. We are in floating rate currencies where it's really an exchange based on capital flows or current account flows,
Yeah.
and there could be separate central banks taking similar actions. And so, net, while you may have weakened the currency internally at a domestic level, it may not really show up in the currency rate itself. So that's where we can get confused between the fundamental argument and what is actually happening in price action.
Okay. What technically would flip you back to a bullish dollar position? Do we need to take out 103?
Yes, I think if we go past the recent high itself, which this is of course the DXY continuous, which is the futures. So
Yeah.
103.9, I think, is the high we've made here, and we would
Okay.
really have to go past that to change this view again.
Okay. Great. Thanks for updating us on your view. I mean, there are valid arguments on both sides. I guess that's what makes a market.
Yes, yes.
Okay.
So with that, I'll switch to the Nifty. I think that's what concerns a lot of people in India. And
Okay.
in terms of positioning, so when I look at the dollar and reflation trade, the first thing I of course think of, apart from being short on currencies, I actually think about being long on the commodity space. So that's where then it takes you to the opportunities in equity space. So suddenly, if you're bullish on not just precious metals as a deflation hedge, but also along with that into oil, energy, then you have base metals, copper, aluminium. So suddenly, all of a sudden, you're looking at the entire metals stocks.
Hmm.
So not just the gold mining stocks, but you're looking at producers and all commodities that could gain from rising prices. So there you have a completely different trade. So I'd end up looking at even the Indian metals index, which I can come to. But let me first speak about the Nifty.
Okay.
Uh, so I've had to rethink about this is that if we didn't have, including India, not stepping in to really reflate the economies, I thought that in terms of the economic winter, a lot of damage had been done in India, because between 2018 and 2000, in fact, I should say 2015 onwards, I had written about India being in an economic winter prior to that, and we started to see the damage being openly admitted after 2015, because we first reported our non-performing assets in the banking sector back then. And once we started to do that, 3 years down the line, we ended up with a financial sector crisis in the shadow banking sector, which is the non-banking financial sector in India. So we ended up with a couple of companies going down, and that could have become a bigger crisis. But what you have now is the Indian central bank backstopping the entire thing. They've not only stepped into the bond market, buying almost 2 lakh crores worth of bonds in this year, and also making a very clear statement, I think, once the COVID crisis was out, that they would not allow any of the banks to fail. So I think that statement, which they repeatedly said in the last week of March, is a big step in changing what could have been the final outcome of the debt crisis in India. It could have led to more defaults, and it could have spiraled in many different ways, but they've sort of stepped in and said, we're not going to let that happen. So this puts us now in line with, reflating, other assets. I think we're looking at the potential for a reflation in Indian equity prices as well. And specifically, there's the opportunity in the beaten down sectors, like I said, in stocks which have fallen a lot and where there's value. Because if you just look at the main index, you can end up thinking that it's too high still on value for the large caps. But we are also in an environment where interest rates have started to come down. So bond yields in India have actually fallen to 5.8%, which breaks a long-term trend line, which comes all the way back from 2002. Just to take that chart for a second and then come back to the Nifty. So this is a Indian 10-year bond yield chart all the way from 2001. And that time too, we'd cut interest rates down to around 5%. And that's when the Indian economy turned around and started to do well. And since then, rates have mostly gyrated in this range, which I think is a broad triangle that we've sort of maybe completed. And we are starting to break now. First, we broke the trend line from 2009. Now we are breaking the one from 2003. And my sense is that could mean, because these are a series of impulsive waves going down, is that we started wave C down, which means much lower interest rates slowly being forced upon the market, because initially they had a lot of difficulty because of the NPAs to really transmit these lower rates. So they were cutting interest rates, but the banks were not really offering lower rates. Now, finally, with the open market operations, they've been able to push some extent lower rates through the banking system. And I think they're going to continue to try and do that, which is probably one of the triggers, I think, for the reflation of assets and pricing of assets in India. Because if you go into a lower interest rate regime, which we've probably not seen in a long, long time, then suddenly you'll have debt available at a much lower rate of interest than we've probably ever seen in the last 20, 30 years.
Could part of the reflation trade, Rohit, be agricultural commodities too? They're still in a long-term basing mode, and I was thinking that we were going to have some major lows in things like beans and corn and wheat into next spring. Is that on your radar agriculturally in India?
So there is a rotation in agro commodity prices. So each of them bottoming at a different point of time. In India too, we've seen some gyrations, but actually commodity prices don't fall too much. So the Indian agro price index actually holds up much better, because the government somewhere provides a minimum support price for a lot of the
subsidies. Yeah. Okay.
So,
all right.
But they've also done something else. They've actually opened up the farm sector for distribution of farm goods just in the midst of this crisis. It was one of the biggest reforms, which really nobody's talking about.
Interesting. Okay, we're talking about it. So it's not nobody anymore. Right? We talk about what no one talks about, Rohit. Okay.
So since you mentioned, and I do scan through all the global agro commodity price charts, and I do see rotation between them, not all of them bottoming at the same time. Right. But one which interests me and also is positive for India is actually sugar. So I'm looking at the sugar price chart. I could actually take a blank chart, so it's much clearer. And what you actually see here at the fag end is one ending diagonal or triangular pattern. And at the same time, if I take a long-term trend line all the way coming back from 1984.
That was 2 cent sugar. I remember it.
Yes. So we're actually picking up, I think, close to the lower end of this channel. I would expect But probably I think that sugar prices have already bottomed.
Wow.
And
50 cents.
in India, sugar is a big sector to bet on. So a lot of sugar stocks are listed. They already picked up price action, and I'm already looking at them doing, gaining further on
Nice.
that side. So sugar is one sector which I'm closely watching for a turnaround. Uh, I think similarly we've seen rice prices also bump up a lot, but of course there are no direct. You have to really find direct producers that can benefit from that in India.
Interesting. It's great. I could ask you anything, and you've already been thinking about it. So, was there anything else you wanted to show us on any of the charts you brought? What is the analogy with the circles at the bottom on your volume chart?
Yes,
High
so
volume being indicative of the washout and a major low. Is that what you're trying
a
to
selling
show
climax,
us?
right? So we've had a selling climax very similar to what we saw. Probably 2008 was the last selling climax.
Yeah.
Now we've got one more, which is showing up here, and this volume pickup occurred with the broad market falling, of course, and now you had most of the large caps also correct quite a bit. So you had this major selling climax, including in the Indian banking sector. So the banking stocks had some of the highest volumes that they've seen in probably 2 decades in the last couple of months. And I think that selling climax is probably lead to the exhaustion at the lows and and the pickup. So which is why I've actually changed my count slightly, unless I'm proven wrong on the reflation theme, which is why I was earlier thinking that the fifth is over right here with this ending pattern ABCDE.
Right.
I am for the first time now, after this correction being done and stocks having crashed, taking an alternate stance that possibly this sell-off was a fourth wave, and we have a fifth wave, fifth of fifth, the last final move through
into what, about 2022?
into 2022 or 2024, somewhere in that
Okay.
going
All right.
dollar cycle, then probably 2024.
Okay. All right. I know some other people that are looking at 22 or so for, the Fed bought us not 10 years this time, but maybe a couple.
Yes, it could happen much faster, as you're seeing, because if you reflate and you end up with high levels of inflation or unfortunately hyperinflation, then things can happen very, very fast.
Oh,
But let's
yeah.
see if that's the
Yeah.
case.
Wheelbarrows full of dollars, huh? And people dump the dollars and steal the wheelbarrow, like the Reichmark. You're not looking for hyperinflation?
No, I'm not. I wouldn't start by
Go
looking
ahead.
at hyperinflation because I mean I've been given the argument by some people that you need to look at the speed of technological change as well, because that keeps bringing prices down while we try to keep thinking about monetary change only. So I'll avoid the hyperinflation argument, but what we can get is an attempt to reflate things, and that can probably push prices up faster than earlier. It may also have to do with a change in the volatility regime, which is we've been through a very low volatility regime for very long, where the VIX or even the India which remained at sub 10% or 12% for a long time.
Right.
We may have changed that, so we probably get more speed, which is good for traders and investors who like to look at charts. You don't get these boring long periods of consolidation.
Oh my God! Yesterday in the S&Ps, there were 3 or 4 vicious swings. It was like being on Space Mountain at Disneyland. So, you did it again, Rohit. Great presentation. So, besides at India Charts on Twitter, why don't you let our viewers know how they could follow you?
So I'll just leave with one last level, which is the parallel channel to the fourth wave, which stretches all the way to 18, 19,000 on the Nifty. So that's the extreme upside. If we manage to get this thing to reflate, that's what we would end up probably seeing.
That's a doubling from where we are right now.
Yes.
Wow. Okay, so you can imagine the 10 baggers within a doubling of a range like that. So really great timing that you were here to give us your changing views.
The level that everybody is probably going to watch is going to be the 61% of this decline, which of course the US indices have already taken out. But the Indian index has not, for some domestic news flow reasons like the India-China thing we discussed earlier, and that level is 10,550. So I think that's the level at which people become more confident that the trend has actually changed. Till that point of time, most people are still questioning whether this recovery can go on. So that's all I think. I think most my updates, of course, India Charts is the only platform that I have that I continue to publish on a daily basis. I also write my monthly Outlook report, and all of that comes under one single subscription, which I've priced very, very uh, affordably for most people. At
Oh, you're
so
not going to reflate your subscription price with the reflation trade?
well, in USD INR terms, it might end up with a strengthening rupee. I might not have to do that.
All right, Rohit. I really appreciate you coming here and edifying the FA.C.E community, my trading warrior brother. And it was great to have you. And I'll talk to you a little later on via Twitter, and we'll get back together in a few months or so and see how this wave 4 is playing out. Okay.
Okay, sure. Thank you.
All right, everyone. Rohit at India Charts on Twitter. Uh, really insightful technician. And that's going to be a wrap for us, everyone. Good hunting. Remember, don't just count your pips, count your blessings, and we'll see you all tomorrow. Adios. Thanks again, Rohit.
Thank you.
You're welcome, Ingmar, Sanjay, Shepard. Adios.